Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Friday. These are the stories that set your agenda. European stock futures tread water following a tepid session on Wall Street, but with $5.5 trillion in options expiring, triple witching could inject volatility in the US session. The Bank of England opens the door to a summer rate cut as former St. Louis Fed President James Bullard says the US central bank could go in September. Plus, Benjamin Netanyahu and Israel's military appear to be at odds over whether destroying Hamas is achievable. This is a wider conflict between Israel and Hezbollah keeps the region on edge. Let's check the markets then. Yes, it looks like the equity markets are feeling out for a further catalyst. We've had some Fed speak coming through, certainly from former officials as well as current officials within the FOMC infrastructure, as we continue to weigh up when the Fed can go next. The Bank of England coming through with a dovish hold yesterday, so we keep an eye on UK assets. We'll get more data out, of course, out of the UK later today, but also the Eurozone when it comes to PMIs. Manufacturing services from France, Germany in the 8 hour, but later in the day as well, 9 a.m. UK time, when again a picture in terms of across the Eurozone when it comes to services and manufacturing, giving us further colour in terms of what seems to be a little bit more optimism when it comes to the health of the Eurozone economy. European futures currently pointing to very modest gains of about 0.1%. You did see some selling pressure coming through from the likes of Nvidia and Apple yesterday that ended up seeing the US session in the red. Currently, FTSE 100 futures pointing up just by 4 points. US futures, S&P E-minis pointing to gains of just 0.1%. Again, after the downside of yesterday, a little bit of selling coming through. Nasdaq futures pointing to gains of 36 points. Let's flip the board and look cross-asset then. Not a lot of movement across US Treasuries right now. The US benchmark, currently the 10-year benchmark, which we'll get up for you shortly, currently at around the 4.3 level. We will continue to watch both the front end and the longer end as well as markets continue to adjust their expectations as to when the Fed can go. 4.25, there you go, on the US benchmark 10-year. Japanese yen continues to be under pressure. Intervention watch back in terms of speculation as to whether or not Japanese officials will have to intervene. Above that 160 level is the line that markets are watching. Currently 158.87 versus the US dollar. Euro dollar currently at 107 as we lead up to that data out of the Eurozone on services and manufacturing. Currently pointing to modest gains of 0.1% for the single currency. Brent at 85.62, just down 0.1% for oil. All eyes, of course, on the Fed's July meeting. Switching focus now to central banks. A couple of Fed funds bets standing out, by the way, to benefit if there are ramped up expectations of a rate cut next month. That remains a big if, of course. Let's get more from Bloomberg MLive's Mary Nicola. Mary, what do we make then of these bets? Two sizable bets within the Fed futures markets. What does that tell us about how some, at least, are starting to position around when the Fed goes next?
Yeah, it seems too early, actually, to be thinking about the Fed cutting in July, largely because we just don't have enough data, and the Fed keeps harping on the fact that they need to see more data coming through. And of course, we have the PCE numbers coming next week. Obviously, that's going to sway the market, but all this just tells us is just how much data dependency has created an increase in volatility. So every time we see any new data that's coming through, we get larger sways in the market. And that's going to continue as long as we highlight, and the Fed highlights, that the focus is on that data dependency. So in my view, it's a bit too early to start betting on July.
Yeah, the market's pricing in 2 cuts this year, but not starting until November and then following in December. A big day in terms of potential volatility in the markets, Mary, with triple witching, $5.5 trillion US dollars. How much in terms of volume and volatility could these markets be bracing for as investors reposition?
Yeah, we've been actually looking at some of the things that we've been discussing within the team is about how heading into quarter end, you might see greater volatility, not only because of the triple witching, but also because of the rebalancing in some of the indices, and as well as people starting to take profit on some of their gains. We've seen exceptional run in U.S. equities, and there's some froth there, but then people could start locking in some of the gains that we've seen. They've seen seen over the last quarter. So you would expect to see, especially heading into quarter end, heading into half year end, that we're going to see that volatility really dominating in the market, and this the options expiry just adds to it.
Okay, index rebalancing, $5.5 trillion of options expiry, potentially more volatility, finally, for some at least, for these markets later in the US session. Bloomberg M Live's Mary Nicola, thank you very much indeed in terms of the positioning around the Fed and triple witching today as well. Switching focus to geopolitics, to the Middle East, where Israel's military has suggested that Prime Minister Benjamin Netanyahu's long-stated goal of destroying Hamas is unachievable, emphasising the difficulties in claiming victory in a war that is now in its 9th month. Let's bring in Jumana Pasechi then, our Horizons Middle East and Africa anchor. Jumana, it seems to be tensions between the military and the Prime Minister. He seemed to come out with some pretty strong language, slapping down some of his military leaders. What is going on in terms of how the military, how the Prime Minister and his team are thinking about this conflict against Hamas?
Yeah, it's pretty remarkable to see all of this out in the open, Tom. And definitely what you're seeing now is an emerging wedge between what some military officials within the Israeli army are saying versus the official government stance. And what we're talking about here is an interview that one of the Israeli admirals gave to Israeli TV yesterday, in which he stated that to say that the goal of simply allowing Hamas to disappear would be like throwing sand in the face of the public, i.e., what he's saying is that their stated objective of completely allowing for Hamas to be destroyed and neutralized, which is what the government has been consistently saying since the last October 7, since the war started, since October 7, is something that is unachievable. And of course, the Israeli Prime Minister was quick to clap back, saying that we cannot leave Gaza until all of the hostages are returned, and we've also succeeded in eliminating and neutralizing Hamas. And therefore, the fact that the military are saying that one of those objectives seems to be unachievable removes one of the bargaining chips that Israel and Netanyahu have in these ceasefire discussions. Because you will remember, Tom, when we spoke about it a couple of weeks ago, the key of the passage of moving from phase 1 to phase 2, that temporary ceasefire to a permanent ceasefire, was contingent on Israel believing that that Hamas's full military capabilities had been neutralized. And if the military don't believe that that's achievable, then it raises questions about all of these discussions that are on the table vis-a-vis that ceasefire deal as well. So very interesting wedge emerging between the two sides.
Yeah, indeed. And it was interesting to see those military leaders, or that military leader as well, essentially echoing, as you say, what we've been hearing from the US in terms of their concerns that ultimately Hamas cannot be completely defeated. When it comes to the northern border, then, Israel's northern border with Lebanon, tensions there, we know, according to reporting, that Israel's military is drawing up plans in terms of a potential offensive against Hezbollah. What is the latest in terms of what's happening in that particular part of the geography?
That's right. So U.S. envoy to the region, Amos Hochstein, has been touring several countries. He was in Lebanon and most recently met with Israeli officials. And the purpose of those discussions were obviously to push forward with those ceasefire talks, in addition to talk about how they can supply further humanitarian aid to the Gaza Strip. And then the third pillar has been looking to de-escalate the tensions on the Lebanon border. There have been daily crossfires, exchange of fires. There's been rockets fired from both sides ever since October 7. But the major difference, Tom, is that in the last few days, the rhetoric has really escalated. We heard from Hezbollah chief Hassan Nasrallah a couple of days ago. He gave a televised address warning Israel about the potential for a ground offensive into Lebanon, saying that they would not hold back in that situation. Also threatened Cyprus, saying that if Cyprus were to offer Israel some military support in terms of air bases, then they would not be spared too. So very fighting words from the Hezbollah chief. And of course, Israeli officials have responded. They too are saying that they are ready and willing to start with that offensive in the northern border. But this, of course, as those mediation efforts continue, as I spoke about, Amos Hochstein has been in the region trying to calm down the situation. But what Israeli press are saying yesterday is that the talks vis-a-vis Lebanon have reached somewhat of a dead end. So it does feel as though if things are going to blow up, on that border, it should happen in the coming days. So we're keeping a close eye on the situation there.
Okay, absolutely. The need for focus on that part of the region, given the tensions and the fears over a wider conflict. Jemana Pasechi, thank you very much indeed for the latest out of the region. Our Horizons Middle East and Africa anchor with the update. Here's what else to be thinking about today then. 7 a.m. UK time, so we're counting down to this. UK retail sales will be out. Expected to see a pretty decent improvement, particularly if you look at ex-auto fuel retail sales for the month of May, expected to actually increase by 1.8%. That's the survey figure versus a contraction of 2% in April. Interesting as well to see that consumer confidence in the UK has risen to its pre-cost of living crisis level, the highest levels now since November of 2021. So it seems like the consumer in the UK is starting to feel a little bit more optimistic. We're also going to get Euro area flash PMIs for France, Germany at 8:15, then 8:30, and then at 9 a.m. for the region, for the Eurozone. And that will give us, of course, more detail in terms of the recovery that's coming through across the Eurozone. Services expected to be still in pretty solid expansionary territory, and manufacturing PMIs for the region expected to edge up slightly from the previous month. That data then we will be bringing to you live as it breaks. We're also going to be watching for any comments from finance ministers of the EU as they meet in Luxembourg, particularly given the concerns around what is happening in France and the potential fiscal strains as they lead up to the vote in France, the parliamentary elections. But, of course, other topics on the minds as well of those finance ministers. We will be across that for you as well, meeting in Luxembourg. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on their terminal. Coming up, the Bank of England reviving speculation of a rate cut. We bring you the latest, and I'm going to be speaking exclusively to Pragmatic's CEO, David Moore. We're going to get his take on how the UK can strengthen its position in semiconductor manufacturing as a company that is central to Britain's ambitions around innovative chips and semiconductors for the future. That's coming up 6:40 UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday. It is June the 21st. Now, the UK is holding a general election, of course, in less than 2 weeks' time as the country faces historic economic challenges. The next government will have to manage the continuing fallout from Brexit, the pandemic, Russia's war on Ukraine, and the debt burden exacerbated by all three. We take a look now at the solution to Britain's growing economic crisis.
Britain's economy is under incredible strain, more than you may realise.
Austerity through to successive, extraordinarily expensive and damaging crises has left the UK with an enormous debt burden.
Compared to our friends here, or in fact in any major advanced economy, national debt in the UK has ballooned the most since COVID. But it's not just borrowing that's an issue. Look at tax revenue as a percentage of GDP. Basically, the share of the country's output that the government takes to pay for what the public needs. And in an election year, that's a massive problem for whoever's tasked with writing a new spending plan.
There's 1 million people, in a sense, missing from the labour force, many of them claiming disability benefit or sitting on NHS waiting lists. That represents a lot of missing productive capacity.
This is all monumental pressure for the next government to withstand and relieve. They need to get the population able to work, doing so, and in a more productive capacity. Then there's wiggle room to deal with high interest rates and bring down national debt, freeing up tax revenue to bolster public services and support the people unable to work in the first place.
Everyone agrees this is an enormous challenge, but if it's one a new government can pull off, the potential gains are massive.
OK, Bloomberg Originals report there on the economic challenges facing the UK's next government, the potential crisis. Now, the Bank of England has hinted that it could be ready to cut interest rates as early as August, less than a month, of course, after the UK general election. The bank held rates at its meeting yesterday amid fresh signs of improving sentiment among consumers. Let's bring in our UK correspondent Lizzie Burden for the details then. Lizzie, you were outside, of course, the BOE across all of this for us yesterday. This was interpreted by some in the markets as a dovish hold.
Yeah, they were honing in on this line in the guidance that accompanied the decision, that the decision not to cut was finally balanced, even though the vote split was 7-2, which is exactly what it was the last time. So pricing has moved. The chance of an August cut now is about 55%. And I bet there are a lot of economists out there saying, I told you so, because there'd been such a repricing in the market after the services inflation data earlier in the week. Of course, it came in unexpectedly hot, but that was referred to in the guidance. Yes, some on the committee thought it was a risk to further inflation, more second-round effects. Others, though, unfazed by it. And you could read that as being because it's backward-looking and they've already had the peak of services inflation. So yesterday, this was the Bank of England kind of saying to us, August is live, bar any inflation surprises. But as we look ahead to that meeting, it'd be interesting to see how Claire Lombardelli votes. She's replacing Ben Broadbent as a deputy governor, and there are some analysts who reckon she'll be a little more hawkish than him.
Yeah, OK, because the vote still came in at 7-2, so there does need to be that shift in the August meeting. So,
but of course, the internals tend to move as a pack,
right.
So it's not that it's not about one by one. It's about a big move of the block.
Yeah, and Bailey is seen by some as being one of the movers, isn't he? Consumer sentiment survey coming in stronger for the UK. We've got retail sales expected out later. That's expected to show a bit of strength. And then, of course, you could be getting this cut then from the BOE in August. It all raises a question again as to why the Prime Minister called the election for when he did. This is a potential big upside for whoever is governing after the election.
If the polls and traders are right, Keir Starmer, as a welcome gift to Downing Street, is going to get an interest rate cut. So, yes, Conservatives will be asking, why didn't Rishi Sunak wait for autumn for the election? I think it was interesting for the Bank of England's part. They were at pains to emphasise in the guidance yesterday their decision not to cut was not political. The politics was irrelevant. It's odd, isn't it, that they haven't had any speakers on the MPC since the snap election was cut. And I think it's interesting to reflect that in 2019, during the campaign, 2 officials started the push for a rate cut regardless of the campaign. And there are many saying today and yesterday the decision not to cut could be seen as equally political. But this is the Bank of England trying to wash its hands of any accusation of being politically motivated.
Well, they're also going to have more economic data, of course, by the time that decision comes in August. We're getting some data out today. What are you going to be looking at? Not just for the UK, but the Eurozone as well. Yeah,
so you mentioned retail sales. We've already had the consumer confidence report, so it's strongest in 2.5 years. Then we get retail sales, so they're expected to show a bounce in May after the wet weather in April. We get the PMIs for the euro area at 9 a.m, but the thing that I'm really interested in is at 9:30 a.m, second quarter PMIs for the UK. That is going to be crucial for the Bank of England decision in August. 1, because it could give us an indication on where inflation's at, and 2, because it could really reveal whether that sticky services print in April that I was just talking about was an anomaly. And if it is, then we're more likely to see an August cut. OK, so look for those second quarter PMIs for the UK, 9:30 a.m. UK time. We will, of course, break those for you. Bloomberg's UK correspondent Lizzie Burden on, of course, the Bank of England and the data to watch across the UK and the Eurozone. Now, on Monday, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds will go head-to-head in a live televised debate moderated by Bloomberg's Francine Lacroix. They also face questions from Britain's leading business groups. Viewers in the UK can catch the business debate at 12:30 p.m. UK time Monday on Bloomberg TV. It's also going to be streamed on the terminal, the website, YouTube and on Bloomberg Radio. Coming up, we're going to take a look at plastic credits and ask if this market can help or hurt efforts at cleaning up pollution. That is next. This is Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, the OECD projects that the amount of plastic waste the world produces could almost triple by 2060. That's if action isn't taken now. Part of the solution to clear the mountains of waste building up could be the use of plastic credits. Let's get the details then, and bringing the expertise from Kirti Vasta, Senior Associate in Bloomberg NEF's Sustainable Materials team. Thanks for coming in. What exactly are plastic credits? How do they work?
So similar to carbon offsets for emissions, a plastic credit is essentially a certificate that proves a certain quantity of plastic waste has been removed or recycled. And often this is from places like beaches, rivers, oceans, where otherwise the waste wouldn't be collected. Now, what's interesting is companies are now buying these credits as a way to offset the plastic waste that they generate, but also as a financing mechanism to fund the build-out of infrastructure for recycling as well as sorting of plastics, particularly in markets like the Philippines and Vietnam, where waste collection is relatively poor or non-existent today.
What do we know about the efficacy of these plastic credit systems? Does it incentivize a shift away from plastics, or does it make the whole system a little bit more complicated?
Yeah, well, it's still quite a nascent market. But we do think that plastic credits can play a really important role, particularly when it comes to the legacy plastic waste cleanup. But of course, the legacy waste is only part of the pollution problem, and plastic credits are not the silver bullet. Where credits can really play an important role is really where corporations can play a role in buying these credits and actually funding the cleanup of waste in a way that's measurable, it's validated, it's tracked. And so we've seen the likes of companies like Pepsi, Nestle, Colgate-Palmolive amongst the top buyers of plastic credits today. And this is actually happening quite a lot in the Philippines, where there's an extended Producer Responsibility Act that the government has implemented that allows the use of plastic credits.
OK, so that suggests that these companies are being, at least on the edges, pretty proactive on this. On this front, is there anything else that the companies should or can be doing at this point?
Absolutely. Well, plastic credits should be used in combination with wider efforts from these brand owners to cut single-use plastic use overall and opt for more sustainable, recyclable options so that the plastic waste doesn't end up in the environment in the first place, right? And so we've been seeing lots of companies now setting targets, corporate commitments to cut the absolute virgin plastic packaging by 2025 and 2030 and switching it out for more recycled or sustainable options. But there is still quite a long way to go and more work does need to be done.
And you talked about the fact that plastic credits market is, at the moment at least, relatively small. What is needed to scale this market?
Yeah, well, in our view, we really think it's policy that's going to be the biggest driver behind this. And with the UN's Global Plastics Treaty being drafted at the moment, we're yet to see whether plastic credits are going to play an important role or even be recognised. So, yeah, we're watching that market quite closely. But policymakers are really thinking about how to clean up plastic pollution, and this could be one of those ways to do that.
OK, really, really interesting. Kirti, thank you very much indeed for coming in with the details, the analysis on how this sector and this space is evolving. Kirti Vasta, Senior Associate in Bloomberg NEF's Sustainable Materials team. If you'd like to hear more from the BNF analysts and what they've been looking at, their research, then do download the Switched On podcast on Apple, Spotify, or wherever you get your podcast. Let's check in on these markets briefly. Looking the European futures to very modest gains of 0.1%. You did have the sell-off that came through in the US session yesterday. Some profit taking, it seems, particularly in the big mega cap tech names, the likes of Nvidia and Apple taking a bit of a hit in the session yesterday. To what extent is that a story of these companies and their valuations being stretched? US futures currently pointed to modest gains of 0.1%. Coming up, we're going to take a look at why Macron's snap election gamble is putting the rise of Paris as a financial hub at risk. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Friday. These are the stories that set your agenda. European stock futures tread water following a tepid session on Wall Street. But with $5.5 trillion in options expiring, triple witching could inject volatility in the US session. The Bank of England opens the door to a summer rate cut as former St. Louis Fed chief James Bullard says the US central bank could go in September. Plus, Benjamin Netanyahu and Israel's military appear to be at odds over whether destroying Hamas is achievable. This, as a wider conflict between Israel and Hezbollah keeps the region on edge. Let's check in on these markets then. The focus really switching to the economic data. We have retail sales out of the UK at 7 a.m. UK time, and then we have a flurry of detail in terms of manufacturing and service PMI for Germany, France, and then the Eurozone at 9 a.m. UK time. And that is where the lens is going to be until we move on to the US session. European futures pointing to very modest gains of just 0.1%. The FTSE 100 pointing to gains of 10 points, up 0.1%. The BOE, as we say, leaving the door open, opening the door ajar, it seems, to a potential August cuts from that central bank. A dovish statement, a dovish hold coming through from the BOE yesterday was the interpretation of many. S&P futures currently at 5,549, pointed to gains of just 0.1%. Nasdaq futures, after the selling pressure that came through from Nvidia, Apple and some of the others in the tech space yesterday, currently pointed to gains of 0.2%. Let's flip the board and look cross-asset. We have a lens on the yen. Intervention watch once again is on the lips of many in terms of the FX space. 158.90 on the Japanese yen versus the US dollar. The US 10-year 425. James Bullard, formerly, of course, of the Fed, suggesting that September could be an option for the Fed in terms of the first cut. Markets pricing in two cuts right now, starting November and then followed by December. Euro dollar at 107. A little bit of strength coming through for the single currency, and we'll see how that adjusts around the economic data. Gains of just shy of 0.2%. Brent 85.70 right now on oil. Now to the politics of France and what it means for the financial sector there. The far right and leftist political forces vying to take power in France faced a hostile reception from entrepreneurs as they laid out competing visions that featured scant detail on how to fix the public finances. The parties, which are leading in polls ahead of upcoming legislative elections, appeared at hustings in Paris, hosted by the country's business lobby, MEDEF. They spoke to Bloomberg's Caroline Connin on the sidelines of that event.
I think you're the one causing the concerns on the markets in a pointless manner. We have decided to widen our majority because I think there is a real danger today to see Jean-Luc Mélenchon and the far left coming to power, which would make France like Venezuela without the oil.
The first panic on the markets was linked to the snap elections call. So go and ask Mr. Macron why he thought it was a good idea to worry the markets. I don't think our policies will worry them for very long because they will not bankrupt the country. France will remain a safe investment.
OK, Jordan Bardella, the National Rally president, and Eric Coquerel, a former MP for France Unbowed, speaking to Bloomberg's Caroline Connin on the sideline of that MEDEF event. Now, the rise of Paris as a finance hub could be at risk after President Emmanuel Macron's snap election gamble. For the details on how this is unfolding, the potential impact on the financial sector, let's bring in Bloomberg's Alex Rajbandari from the French capital for more on this. Alex, Paris then has been one of the main beneficiaries of Brexit in recent years. We've sat here in London and seen that happen. We've been at those events in Paris where Wall Street banks have been building out their teams. Is this decision by Macron now putting all of that at risk?
Well, as you said, yeah, Wall Street banks have been pouring a lot of money and assets and moving in traders to Paris. I mean, just a month ago, Morgan Stanley was hosting an event with Prime Minister Attal to announce an expansion in headcount in Paris over the next years. All of this is not going to be reverted soon. None of the banks have said they would have indicated they would do that. And when you speak with people familiar to their plans, eventually all the investments they made were with a long-term view, and none of this is going to be changed with the current uncertainty for now. However, when you speak to lobbyists in other countries, like in Italy, in Germany, or even in the UK, you can hear that, well, you know, they're hoping that their own market is going to be a bit more competitive for firms when they're willing to relocate to, you know, a place somewhere in Europe. Yeah, listen carefully, and you can almost hear that here in London, that sight, sense
of glee in terms of what's happening in France. We've gone through this ourselves, of course. Part of the success for Macron when it comes to the financial sector, many would argue, is the fact that he rebranded France in the eyes of the world of finance. Is that rebranding now at risk?
Well, the main thing after the snap election decision is uncertainty, and for investors, it's not a good thing. Hopefully, it's going to be short-lived, and France is going to have a majority in Parliament in the next month. However, if there is not such if there's a hung Parliament, for instance, uncertainties could be detrimental for the country if it were to last too long. Bankers, when speaking in private, are worried about some things. Taxation comes a lot because both sides, the far right and the left-wing alliance, would come up with taxes like a wealth tax, for instance. But another worry is immigration from the far right. They've had historically a tough stance on immigration. And, bankers are worried whether they're going to be able to allow to issue some work visas for their bankers willing to relocate to Paris. So that's one worry. However, when you speak to other people, those worries are overblown. If you listen to Stéphane Boujnah, the CEO of Euronext here, he believes that the institutional framework of France is strong enough to ensure that whatever happens next month is not going to be as tough as people fear.
OK, so maybe a little bit of nuance to all of this. Bloomberg's Alex Rajbandari with the details on the potential risks to Paris as a financial centre as a result of the changing politics of that country. Alex, thank you very much indeed for the update on that front. Switching focus now. Luxury car maker Bugatti has unveiled the Tourbillon. It's $4 million, 1,800 horsepower hybrid hyper car. The hybrid will succeed the Chiron as the company pushes to extend its hypercar dominance and secure a stronger position within parent company Volkswagen. Bugatti Rimac CEO Mate Rimac spoke with Bloomberg's Oliver Crook.
In the vast range of really, really expensive supercars, very few come as close in price to a Bugatti. They've lived up to their reputation with their newest model, the Tourbillon. Replacing the Chiron, it was redesigned from the ground up, and it had to be. It's their first ever hybrid model. With an 8.3-liter naturally aspirated V16 engine, plus 3 electric motors, it packs a whopping 1,800 horsepower, propelling it more than 400 kilometers or 250 miles per hour. And it can be yours for a starting price of 3.8 million euros. I'm very pleased to be joined by Mate Rimac, who is the CEO of Bugatti Rimac and joins us now from Zagreb. Thanks so much. Really great to speak to you. Very exciting car that we now have off. I think it's really interesting for Bugatti because every time you guys release a car, it's not a car for a couple of years. It's a car for something closer to a decade. You have now decided to release your first ever hybrid. You have an electric car background. Why did you stick to the ICE?
Well, actually, as you say, each new Bugatti is a big occasion. But a completely new one, developed completely from scratch, which the Tourbillon is something that comes around only every few decades. Let's say shareholders were pushing that the next Bugatti should be electric. And at that time, that might have been sounding like the right decision.
And you mentioned your your customer, who is obviously a very unique customer, a very rich customer, but a very sort of savvy customer. So why for them is the starting price 3.8 million euros? Why is this car worth that?
Well, it's a Bugatti, first of all. That's something very special. But you can see by looking at the car and by feeling the car, it's very unique at every detail. For example, one of the things we wanted to achieve that every piece of the car is actually a piece of art for itself. So you can pick any piece up, put it on in a gallery, and it would be an exhibition piece, even without the rest of the car. If comparable, it's no longer Bugatti. So it's something completely unique and something completely different than anyone else. And also what Ettore said, nothing is too beautiful, nothing is too expensive.
I want to understand where you're selling most of your Bugattis right now, and where do you see geographically the most promise?
1/3 of the market is US, 1/3 is Europe, and 1/3 is the rest of the world, mostly Middle East and a little bit Japan and some other markets. We currently do not sell at all in China, but the market of ultra high net worth individuals is growing constantly, and I think it's predicted, or it's pretty clear that the market will continue to grow.
How is the Bugatti customer, the kinds of people buying the car, changing? Is there a sort of a shift in the age? Are they becoming younger? Are more women buying? What are you seeing there?
Yeah, we definitely see a shift, especially, let's say, young tech entrepreneurs, be it through from the finance space or online gaming or some kind of, let's say, new businesses that are more in the energy sector or tech in general, or real estate. We see that changing a lot now. So a younger audience being interested in the brand. And I mean, Bugatti stands for you made it. It's the ultimate you made it symbol.
You must crash test these cars. How painful a process is that?
Yeah, well, there's no shortcuts in producing very expensive or very low volume cars. Actually, we, even from our perspective, regardless of the regulation, we want to make sure that these valued customers are very safe. So we do thousands of tests and hundreds of homologation tests and crash tests. So we have to build something around 30 prototypes in the development process. And around 15 of them will be crashed multiple times over and over again until we pass all the crash testing.
Bloomberg's Oliver Crook there, speaking with Mate Rimac, the CEO of Bugatti Rimac. Staying in the EV space, Bloomberg understands that Canada is preparing potential new tariffs on Chinese electric vehicles in line with actions already taken by the US and EU. Sources tell us the government still has to make final decisions on how to proceed, but will likely announce public consultations soon. Canadian Prime Minister Justin Trudeau has been under increasing pressure both at home and abroad to follow the lead on the US, which plans to nearly quadruple tariffs on Chinese EVs. Coming up, I'm going to be speaking exclusively to Pragmatic's CEO, David Moore, about the company's efforts to propel the UK onto the global semiconductor stage. That is coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Nvidia shares closed firmly in the red, erasing more than $100 billion in market value. Meanwhile, here in the UK, chip maker Pragmatic wants to propel the UK onto the global semiconductor stage. Last year, the company secured £182 million in funding, opening the UK's first production facility, which has the capacity to churn out billions of flexible chips. Joining me now is chip maker Pragmatic's CEO, David Moore, formerly, of course, and with experience at companies including the likes of Intel and Macron. David, thank you very much for joining me this Friday morning, bright and early. Let's start with what the proposition is for Pragmatic. You say you're revolutionising the build-out of semiconductors, particularly here in the UK. What is it that you do, and what clients are you servicing?
Thanks, Tom. I'm glad to be with you this morning. Pragmatic Semiconductor is a UK-based world leader in flexible semiconductor technology. So based in Cambridge, where I'm joining you from today, with our manufacturing in the northeast of England, we develop and manufacture ultra-thin, low-cost, flexible chips with an ultra-low carbon footprint. And this enables us to embed them for item-level intelligence in virtually any object on the planet. And we see applications in industrial, consumer, healthcare applications, enabling smarter packaging, for instance, for more circular economy, wearable monitors for more affordable healthcare solutions, better visibility, safety, security in the supply chain. So a whole host of applications for what is really a revolutionary approach to semiconductor manufacturing.
And David, you successfully raised that funding last year. You built out this facility. There's a lot of capex there. Are you getting the demand from customers to kind of offset that spend? What are you seeing in terms of demand, and where is it coming from? What kind of sectors?
Absolutely. So, I mean, obviously, customer demand is extremely strong. And so we are right now ramping production of our first fab. So that's our production facility up in Durham. That's the UK's first 300 millimeter 12-inch wafer fab in the UK, Tom. From there, we're going to be taking the funding that we successfully raised in our Series D. That was, the largest venture raise in European semiconductor history. So very, very fulfilling in a challenging environment. We're going to be taking that funding and accelerating our capacity. So going from billions of ICs per year to tens of billions ICs per year. And of course, advancing our technology in the process as well. And so, ultimately there is demand across a wide range of applications, but front and foremost for us is really in enabling that smarter packaging in fast-moving consumer goods. So providing authentication, track and trace capabilities, but ultimately to enabling reduced waste, more recycling, reuse, for a more circular economy. So basically leveraging both the fact that we're inherently more sustainable from our manufacturing standpoint and leveraging that into better sustainability outcomes across segments.
Does that suggest that you sit outside the kind of demand we're seeing for generative AI? Very different chips, GPUs versus the non-silicon that you guys produce. Is there any overlap between what's happening in the world of generative AI and what you are doing now, or potentially what you're going to be doing in the future?
Yeah, no, I think that's a great question. I think, look, obviously chips front and center in terms of, that's depending on them for almost every aspect of our daily lives. And so clearly there are roles to play across the cloud, what's known as the edge, and then all the way out to at the item level. And so that's really where Pragmatic plays. There's going to be a lot of AI-based solutions for Internet of Things at scale, enabling track and trace, higher efficiencies. And what we're really about is providing a digital identity and information footprint for basically every physical object on the planet. And so our mission is to see our technology deployed in trillions of smart items over the next decade. And that plays very much a role in providing kind of that data for a lot of these really, really impactful and important AI solutions, not just in terms of market demand, Tom, but also in terms of the underpinnings of solutions to some of our most important environmental and societal problems.
Yeah. David, the UK doesn't have a great track record on this kind of stuff. You're ticking a lot of boxes and you're making that progress. But I'm thinking of Graphcore that is facing those challenges, looking for a buyer as we stand. Newport Wafer Fab, that's been sold to a US company. British Volt, an electric vehicle battery maker, essentially collapsed. What is it that the UK is doing wrong? What is it that it needs to do to support these kind of businesses, the manufacturing of this future tech?
Absolutely. When it comes to semiconductors, I think the announcement of the national strategy last year here in the UK, I think was an important step forward, really just acknowledging the importance of semiconductors. I absolutely believe there's a role for the UK to play on a global stage. We've seen a lot of push for diversification of the supply chain. I think it's important in terms of how we look at the opportunities for the UK to play its role in areas of strength. And so clearly, let's say advanced silicon manufacturing may be, a bridge too far for the UK, but the manufacturing using advanced materials such as Pragmatic's thin film technologies is a much more, I would say, capital efficient approach to servicing some of that demand that complements silicon in the broader market. So ultimately, what we'd like to see is a continued focus, obviously, of the sector. We do want to see continued rollout of incentives that help encourage more investment in domestic manufacturing. I think we're demonstrating that it can be done in the UK and it can be done well. And we're also building too on a long heritage, as you say, for the UK in the semiconductor industry. And so I think there's a great opportunity and an important one for the UK to play a strategic role on the global stage.
OK, David Moore, thank you very much for taking the time. Pragmatic's CEO, and what is needed to propel this innovative push around semiconductors here in the UK, with the focus there on incentives. We'll see what the next government does on that front. David, thank you very much indeed for taking the time. Now to some other stories making the news this Friday. Santander has removed popular messaging software, including WhatsApp, from smartphones issued to its investment bankers in Spain. While use of the software had already been banned previously, some employees kept the apps on their phones, raising the possibility they were still using them. The campaign by Santander comes amid a wave of large regulatory fines in the US over unauthorized messaging apps. Lazard CEO Peter Orszag has told Bloomberg that the company is weighing several opportunities to acquire a private credit firm that would help expand its $250 billion asset management arm. He spoke exclusively with Bloomberg's Francine Lacqua about the company's ambitious expansion plans.
In the asset management space, we need to protect where we are. We need to expand by doing some additional hiring where it makes sense in public markets. And then we need to acquire. And the acquisitions will be disproportionately in private markets. So in private credit, infrastructure, real estate, places where we are not very present yet.
Plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Friday. Let's check in on the yen because it is once again the Japanese currency on intervention watch. The level that our team are saying you need to look for is 160.17. That is the level at which they intervened. Unofficially, of course, they didn't confirm at that time that they were intervening. They've since come out and said that there was intervention. They are open to doing more within these FX markets. But you've seen 6 straight sessions of weakness for the Japanese yen. The Treasury also putting out a note as part of their annual report in terms of where Japan is on the trade balance front, but also the currency. So we watch for potential intervention for the Japanese yen as that weakness continues. Of course, a lot of that is about what's happening with the Fed and the continued strength that's coming through in terms of the, I should say, rate differential between the Fed and the BOJ. Though inflation data did tick up in Japan, suggesting that maybe there is scope for further hikes coming through from the BOJ. Let's flip the board, look quickly at what is happening in terms of the UK story. We were talking about the fact that Paris is now, there's a question mark around Paris as a financial centre, arguably as a result of the political volatility and uncertainty. Well, in terms of flows into the UK, I'm not sure if the two are directly linked, but certainly you've seen a pickup in flows to the UK. The political atmosphere here is seen as being less volatile with the election on July the 4th. And in fact, you have seen the proportion of fund managers who are net underweight on the UK and UK stocks falling to the lowest level in a year at just 12%. And this is mid-cap equity fund flows, by the way. Back-to-back monthly net flows, the highest that we've seen for the first time in about 3 years in terms of consecutive flows into UK stocks. Is that and does that have traction? Will be a question we may be putting to some of our guests in the hours ahead. Let's flip the board and look at the data out of the euro area. There's going to be scrutiny, of course, of what is coming out of Germany and France and the Eurozone at 9 a.m. in terms of manufacturing and services. Services expect to be clearly and pretty significantly still in expansionary territory. Manufacturing PMI for the Eurozone expected to edge up slightly. So we're getting a build out of the picture when it comes to what is looking like green shoots of a potential recovery in the Eurozone. Of course, from a low base, of course, and how that feeds into expectations around the ECB. A reminder that on Monday we are going to be doing a live debate with the UK Business Secretary Kemi Bannon and Shadow Business Secretary Jonathan Reynolds here at our London studio, London headquarters. That live televised debate, 12:30 p.m. UK time. But before that, it's Markets Today. Stay with us for that. This is Bloomberg.